Hi all, this is Dr. D. Kritika. Again, I'm meeting you to have a brief about your history of your stock market regarding your playlist, why we have to invest in your stock market. So, to understand our history as well as up to date of information up to your 21st century, kindly watch this video. The stock market, as you all know, it is a publicly traded companies issuing the securities or the shares to raise your capital, that is from individual or the individual investors, institutional investors. So the price of this shares is determined by way of supply and demand and their investor sentiment, company's overall performance and the overall market conditions. The shares value will be differing and you will be returned getting back your dividend. So this is regarding your stock market. And um, regarding your history of your stock market in India from the 18th century towards your 20th century, I think you can understand properly that the history of your stock market traces to the 18th century when the East India Company issued the bonds and shares to raise the capital for its operation. So this is the first share market in our India which is informally framed in the particular region of Mumbai. That is, the trading flow was under the shade of sprawling banyan tree opposite to the town hall in Mumbai. Here a few people gathered together under a tree informally to trade in the cotton. This was because the Mumbai was a very busy trading port and essential commodities were traded here often. So the Companies Act was introduced in the year of 1850, following the which the investors started showing an interest in the corporate securities. The concept of the limited liability also put an appreciation around this time. In 1875, organization known as the Native Share and Stockbrokers Association came into being, and this was the predecessor of the BSE, that is your Bombay Stock Exchange. And again in 1894, the Ahmedabad Stock Exchange came primarily to enable the dealing in the shares of the textile mills. And in 1950s to 1960s, in 1950 the stock market trading continued to evolve in India with several regional stock exchanges becoming operational. So this market remained relatively small and again primarily served the needs of the British colonial authorities and their commercial interests. But in the case of the 1960s, what happened is the government introduced the Securities Contract Regulation Act in 1956, providing the first legal and regulatory framework for the stock exchanges and securities trading in India. So this significant or the important step in the development of the Indian stock market. And in the late that is in your 20th century, marked a very important transformation in your Indian stock market. That is, in 1992, the NSE was established, introducing the electronic trading and modern technology to the Indian stock market, and it played a very important role in bringing the transparency and efficiency into the market. And then in 1990s we introduced the Nifty and Sensex, which was very useful to the investors. As we discussed in our previous slides, you all understand about the Nifty, that is your 50 index of a particular benchmark companies regarding the performance in the Indian stock market. Sensex, that is S&P BSE Sensex, it has also become a prominent stock market indexing, tracking the top companies listed on the BSE. Okay, so this is regarding your development in your stock market. In late 90s and 2000, there was a scam in the Indian share market. So in 1990s, the decade saw a infamous, that is, we all know that Harshad Mehta scam was happened with the manipulation of the stock market using the illegal funds. So it raised questions about the need of the regulatory oversight. In the early 2000, the Ketan Parak scam was another significant event in the Indian stock market history. It involved fraudulent trading practices which lead to the regulatory changes. And again in the 2008, the global financial crisis of the 2008 had a substantial impact on the history of the Indian stock market, causing significant market corrections. So these are all the scams which have happened regarding the fraudulent activities in 1990s, early 2000s and 2008, and economic reforms and globalization happened in the same year of 1991 to 21st century to avoid all these fraudulent activities. So in 1991, India initiated economic liberalization and reforms, attracting the foreign investment, removing the trade barriers and privatization state-owned enterprises. These reforms transformed the Indian economy and the stock market. In the 21st century, the stock market continued to grow, attracting both the domestic and international investors, and it witnessed periods of bullish trends and corrections reflecting the economic conditions. And in early 21st centuries, demutualization and regulatory framework has occurred. That is, the Indian Stock Exchange underwent mutualization, separating the ownership and the management. That is, this made the stock exchange more competitive and efficient, and the investors, they showed very more interest in investing in your stock market. So the Securities Exchange Board of India, that is your SEBI, established in the year of 1988, continued to play a very crucial role in your regulating and supervising various aspects of your Indian stock market. Okay, and it also merged with your FMC, that is your Forward Market Commission, in the year of 2050. So SEBI, along with the merger with your FMC, they strengthened the commodities market regulation, facilitating both your domestic as well as the foreign institutional participation. And again, in the 21st century, the online trading and technology advancement has happened, and the trading platforms become very easier, and the investors feels very easy to participate in the stock market. The current state of your Indian stock market is, today the BSE's market capitalization is likely to be around 53.8 trillion, and the market capitalization of the NSE is established to be over $3.71 trillion. So the exchange is still on party in terms of your start trading volume. So nowadays the people shows more interest sitting at their homes itself. They are able to create your demat account, avoiding the zero brokerage and updating them their investments, and they are able to scatter their investments also. So kindly make use of the opportunities which is provided by our government, and try to invest in your shares and debentures, bonds, also mutual funds, and show interest and have the awareness regarding the stock market. Thank you for watching.